Divorce is often described as one of the most stressful events in a person's life, ranking up there with the death of a loved one or a major illness. And while the emotional turmoil is overwhelming, it's the financial unraveling that can leave scars for decades if handled poorly. You're not just separating from a person, you're surgically separating a tangled financial life that was built for to independent, functioning units. Miss a single account, misunderstand a retirement asset, or fail to properly document a debt, and you could be signing away your financial security or inheriting a liability that cripples your fresh start. This process isn't about vengeance. It's about accuracy, transparency, and strategy. In this guide, I'm going to be your financial first responder. We will walk through, with clinical detail, exactly how to handle the financial paperwork during a divorce. This is your master checklist for gathering documents, understanding what they mean, protecting yourself, and building an undeniable picture of your marital estate. Knowledge here is not just power, it's protection. Before you touch a single bank statement, you need to establish a foundational principle: financial hygiene and separation. If you haven't already, open a new individual checking and savings account at a bank where you do not have joint accounts. Start having your paycheck deposited there. This isn't about hiding money. It's about establishing a clear, separate financial stream for your living expenses and legal fees. Next, pull your credit report from all three bureaus. This document is your financial X-ray. It will show every account where you are listed as a borrower or an authorized user: mortgages, car loans, credit cards, personal loans. This is your starting map of the debt landscape. Now, if you suspect your spouse is financially irresponsible or could become so, you need to take protective steps. For jointly held credit cards, you can call the issuer and ask to lower the credit limit to the current balance to prevent new spending. However, be aware that closing joint accounts can hurt your credit score. Freezing them is often better. The goal is to prevent new marital debt from being accrued. This is also the time to start changing passwords to personal email and financial accounts for your individual assets, but never interfere with access to joint accounts or information. Transparency is legally required, but securing your personal digital life is prudent. Now we move to the core of the process, the document gathering marathon. You need to create a comprehensive financial snapshot. Think of yourself as a forensic accountant building a case file. You will need at least 3 to 5 years of records. Create both digital and physical folders. The non-negotiable documents are, first, income documentation, your and your spouse's last 3 years of personal and business tax returns, all schedules, especially Schedule C, E, and K1 if self-employed, recent pay stubs, Buddha South, and 1099s. Second, asset documentation, statements for every single account as of the date of separation and for several months prior. This includes all joint and individual checking, savings, money market, and brokerage accounts. It includes retirement accounts for 101Ks, IRAs, Roth IRAs, pension statements, and government retirement plans. For these, you need the most recent statement and the statement from the date of marriage to establish what was premarital versus marital growth. Third, liability documentation, statements for all mortgages, home equity lines, car loans, student loans, credit cards, personal loans, and medical debts. Note the account numbers, balances. Interest rates and payment histories. Fourth, property documentation, deeds for all real estate. Recent property tax assessments and any appraisals, titles for vehicles, boats. Avis, statements for any owned timeshares. Fifth, insurance policies, life, disability, health, auto, and homeowners, renters policies with details on coverage, beneficiaries, and cash value if applicable. But the paperwork isn't just about accounts you can see on a statement. It's about the hidden or illiquid assets and the lifestyle expenses. This is where a detailed inventory becomes crucial. You must document the contents of your home. The best way is a video walkthrough. Open every drawer, every closet, the garage, the shed. Narrate the items as you film. This provides evidence of property that could disappear. Also, catalog high-value items like jewelry, art, collectibles, and antiques with receipts or appraisals if possible. Furthermore, you need to document your standard of living. Gather 12 months of bank and credit card statements to track your household spending. This data is critical for determining realistic budgets post-divorce and for arguing for appropriate spousal or child support. It answers the question, what did it cost for this family to live? An insider pro tip is to also gather any documents related to gifts or inheritances received by either party during the marriage, as these may be considered separate property depending on your state's laws. Keep records showing the funds were kept separate and not commingled. With this mountain of documents in hand, your next task is synthesis. You, ideally with your attorney or a financial advisor, need to create the key documents, a balance sheet and a cash flow statement. The balance sheet lists all assets at their current fair market value and all liabilities. The difference is your net marital estate. This is what is subject to division. Be scrupulously honest but also thorough. Undervaluing assets can be as harmful as overvaluing them. For retirement accounts, throughout this entire process, communication and strategy with your legal counsel are paramount. Provide them with your organized file. They will use it to complete mandatory financial affidavits for the court. Be wary of any advice to hide assets or income. Not only is it illegal and can result in you losing your share or facing penalties, but forensic accountants are very good at finding discrepancies. Your strategy should be based on full disclosure and a clear-eyed assessment of what you need to be financially secure. If you are in a high-conflict divorce or suspect complex assets like a privately owned business, stock options, or royalties, hiring a forensic accountant is worth their weight in gold. They can value businesses, trace separate property, and uncover disguised income. In conclusion, handling financial paperwork during a divorce is a grueling but utterly essential administrative and strategic project. It is the process of converting a shared, often messy financial life into clean, documented data. By methodically gathering records, protecting your credit, inventorying assets, understanding your cash flow, and working transparently with professionals, you move from a position of fear and uncertainty to one of informed negotiation. This diligence ensures the final settlement is based on reality, not emotion or omission, giving you a solid foundation for the next chapter of your life. Disclaimer, I am not an attorney, certified financial planner, or divorce mediator. This video is for educational and informational purposes only. Divorce laws vary significantly by state and country. This information is not a substitute for professional legal or financial advice. You must consult with a qualified family law attorney in your jurisdiction to understand your rights and obligations and to develop a strategy tailored to your specific situation. If this detailed guide to divorce finances was helpful, please support the channel by liking this video and subscribing. It helps us continue to create content that navigates life's toughest challenges in the comments. Let me know which part of the financial divorce process you think is most often overlooked. Thanks for watching, and here's to building a secure and independent future.